Hey, what's up, everybody? It's Thursday, July 28th. Today was a really entertaining day. I'm going to talk to you about it. First of all, we got the advanced estimates for second quarter GDP. That was a negative 0.9%. I told you we're going to get a negative print. And actually this negative 0.9%, that's a little bit better than I thought. I thought we'd be down like about 1.5%. And you know, it's still possible that we can get a third consecutive quarter of negative growth. I don't think that's going to happen just because I see the fiscal picture improving, as I've been telling you guys, at least from the standpoint of net spending. That's the growth in the deficit. But, you know, we got to watch that. But right now, I think the contraction in the economy, these last two quarters, you know, and if this is, I mean, the definition of a recession, which is now, you know, that's up for debate. The White House is saying it's not a recession. You know, all these labels, I'm not a big believer in labels, trying to define something as narrowly as that. I mean, you could make a case that working class people have been in recession like for the last 40 years, basically, because there really hasn't been very little wage growth with respect to or compared to inflation. So, I mean, like, what's the point of saying, you know, 2 quarters down is a recession, or the White House is saying it's not a recession because it's low unemployment? I don't get all wrapped up in these labels. I mean, I just don't. I mean, you know, for some people it could feel like a terrible recession, and there are people who are just, you know, they're making more money, or they're living high now, higher than they've ever lived. So I'm not going to get into that whole thing. Is it a recession? Is it not a recession? We had 2 quarters negative, and it was a shallow negative. The one thing I will say is that, you know, I told you that this was going to happen, number one. And let's look now. First of all, I said this was a really entertaining day because, I mean, if you were on Twitter today, and by the way, if you're not following me on Twitter, because I post a lot of tweets during the day with respect to, you know, the markets and my observations. It's just twitter.com/Mike Norman. So follow me. But what amused me today was just, wow, the monetarists, you know, people who follow monetarism and monetary policy, and that's like 99.9999% of the entire investing world and Wall Street, they were in a complete meltdown. I talked about this yesterday on the video. I mean, they were just beside themselves yesterday, and to the point where I actually saw some of these tweets from some of these people, like, you know, they were cursing. There were curse words in there. It was like, hey, if you think this is good, that stocks are going up and we're in a recession and the stocks are going up because it's going to get more, you know, welfare, whatever they mean by that. Of course, they mean, like, you know, monetary policy. Then F you. That, some guy wrote that, but he spelled it out. But I love this. I mean, and it goes back, really, it goes back to what I've been taught, what I said like earlier this year. I said, I can't wait until this starts to happen, because we're going to see the meltdown, and it's going to be so, you know, entertaining. And it is. Again, for all these people who view everything through the lens of monetarism, you know, it's all about monetary policy in their minds. It's like, if that's not working, then their entire worldview is collapsing around them. That's what's happening right now. They just cannot fathom this stock market rally. It's blowing their minds, and they have to try to rationalize it somehow. Now, some people are just losing it completely, like the guy who tweeted the FU, and some are saying, well, you see, this is just the market pricing in a Fed reversal. So they have to understand this, or they have to frame this again in the context of monetarism. They're not looking at fiscal flows. They're not looking at anything else. I should mention, however, so yeah, let me end off with that. Like, it was a really, really entertaining day. Follow me on Twitter, twitter.com/Mike Norman, and because I went, you know, I was ragging on these people big time today, and you know, I mean, because they deserve it. Look, I mean, if that's how you operate, with a very, very narrow, you know, almost sclerotic institutional worldview, where you're not, first of all, you know, and most of these people, I would say nearly all of them, don't even really understand monetary policy. I mean, they view it wrong. Again, they see interest rates as a tool to squash inflation, where interest rates are just price setting and a fiscal operation. It's a redistribution of income. I mean, you know, and the way they view inflation, you know, inflation's bad, deflation they never talk about, but inflation is the thing that's bad. But look, we saw like blowout earnings from oil companies, Valero, you know, which is a stock I own, blowout earnings. Redistribution of income. So they don't understand monetary policy. But what I was going to say, like, if you have people who just view the world, you know, in this very, very narrow, rigid fashion, where even all their underlying assumptions and understandings are wrong or backwards, you're going to get a moment or moments like this where they're just going to, you know, they're going to freak out because everything is imploding and they don't understand why. And, you know, like the cognitive dissonance, the stress that it causes, and it's just manifesting in this is crazy and just like really, really hyperbolic comments, you know. And they're talking about you just can't happen because look at the growth rate in the money supply. It's always monetary money supply. And meanwhile, you know, we're seeing, and I've been telling you guys that the deficit is going up. That's the supply. That's the real high-powered money going back into the economy, going back into the non-government's financial balances. So it was a really, really entertaining day. The other thing we saw today after the close, okay, Amazon had very good earnings and revenues. Apple had both of these stocks are up in the after hours. Apple even said they're looking for a fourth quarter pickup in revenues. So, I mean, that's bullish. Now, a couple of things, because we're just at the very beginning of this rally. And the reason why I say that, remember, if you've been following me for a while, you know that I've been talking about that April tax drain. Back in April, when we had that big, huge $324 billion surplus from the tax drain. And I, you know, practically every single video, I've been telling you it's going to take time to replenish that drain, okay? And this year in particular, because, you know, tax flows were kind of exceeding spending flows. Remember, in June, you know, we had 11 days of negative flows because taxes were so high. And it was just taking longer than what we had become used to for the tax drain. You know, then the government spends that money right back out again. So you get a drain. That's why you have that saying, sell in May and go away, because the money gets drained out in mid-April. May is bad. And then by June, July, August, you get the summer rally as the money gets spent back out into the economy by the government. And it's been taking a little bit longer this year because tax flows are very high. But now, we're only like 14 billion away from completely replenishing that April tax drain. All right? I've been giving you these numbers, the breakdown of these numbers, like since the end of April. You know, we started off negative 324 billion. We're only negative 14 billion now. So nearly all of that drained, you know, income and savings has been put back. So like now the swimming pool, going back to the swimming pool analogy, now the swimming pool is just about where it was pre-April. All right, all that money being put back in. Now, once that gets, completely refilled, and that's going to happen within days, all right? Actually, August 1st, the first of every month, you're going to get a big net positive flow. That's like 100 billion. Last July 1st was 119 billion. We are going to be adding now to the level of that pool. So we're back to where it was before the April drain. And now we're going to get more water coming into the pool. It's going to like go all the way up to the top and overflow. August, again, I'll remind you guys, August is going to be a quarterly interest payment. So August is going to be huge, man. Huge. And so, like I said yesterday, this bearish sentiment, which, the monetarists, again, their minds are blown when they see this, look at the frustration, they're cursing. August is going to be even bigger, and a lot of that, or at least some of that negative sentiment is going to start to be unwound, and it's going to be violent. Like the rally could really be violent in August. September's a different story because mid-September we're going to get a quarterly corporate tax payment, and that's going to be a drain. But, enjoy this because it's going to be fun. It's going to be so much fun. I mean, get your popcorn ready because I cannot wait to see what kind of a meltdown these monetarists and how they're going to, they're going to have to rationalize this somehow. And of course, they're going to rationalize it again through the lens of monetary policy. In that context, they're going to say, oh, it must mean that the Fed is going to reverse course. Which the Fed hasn't given any indication on that. But if the Fed does, start to hint at reversing course, I mean, watch out. This thing is just gonna go nuts. But August is gonna be a big, big month, and they're gonna get squeezed, and they're not gonna know what's going on. They're not going to know what's going on, and they're going to be parsing every single word that comes out of an FOMC member's mouth to see, maybe they're leaning towards reversing policy or something like that. And it has nothing to do with that. It's all about these flows, folks. I cannot overemphasize this. It's all about these flows. So, it was really, really an incredible day. And again, I mean, we're coming into August, August 1st. That's next Monday. That's a big positive fiscal flow day. Then you have August, around August 15th, you're going to get that quarter. I mean, August is going to be a huge, huge positive fiscal flow month. And all this stuff that they're talking about, oh, that's another thing, because the really, really fun stuff is still yet to happen. And I'll tell you what that is. QT, quantitative tightening. I just looked at the Fed's latest release, the H.4.1 release that comes out every Thursday. Practically no QT has happened, okay? The Fed's balance sheet is still like around 8.94 trillion. I think we had, I don't know, maybe like 9 billion reduction in the week. It's nothing, nothing. Powell said yesterday that the slow, rollout of QT was due to settlement issues on what the securities the Fed holds in its portfolio. I'm not really sure what he meant by that. Maybe he meant redemptions. I don't know, but hardly any QT. So right now, the monetarists are saying, yeah, well, maybe the market's going up now, but wait until QT. Wait until they start doing that liquidity drain, right? And I mean, this goes back to what I said months ago when I said I cannot wait until that QT happens because, again, they don't understand it. I mean, the banks are sitting there. When when that drain finally gets going, when that reserve drain finally gets going, remember the Fed had to create a whole separate facility so that the banks and the money funds could shunt off their excess reserves into that facility, because otherwise they were pushing up against regulatory constraints, right? The leverage ratio and all that stuff. I mean, they want it to come down. That's going to create even more loans. So I said months ago, I said, I can't wait until this happens, because I want to sit back and watch, because they're just going to be like, what is going on? They're not going to have any understanding of what is going on. So we still, Act 2 is still yet to come. So get the popcorn ready, because it's going to be unbelievable. I just wish the Fed would start this QT. By September, October, we're going to probably be needing it. I mean, I want to see an increase in bank credit, as long as, we are seeing the leading fiscal flows, the daily spending, those things are trending down, but so is I said yesterday, so are tax flows. I think they look like they're trending down. So the net is getting bigger, right? When you take when you subtract taxes from spending, if the taxes now are shrinking faster than the spending is shrinking, then that equation, that value becomes bigger. So that's a positive thing. So yeah, today was really cool, very entertaining. Don't forget to follow me, because I was posting up stuff about this all day on Twitter. So it's twitter.com/Mike Norman. See everybody tomorrow. Bye.